Okay, so it's October the 28th. I just wanted to go through a few more trade ideas. I'm going to go through three. These are actually trades I all took in the last day or so. The first one I want to talk about is Whitbread, it's UK share, quite a big UK share. It owns sort of brands it owns: Costa Coffee, the Premier Travel the hotels, and the sort of Brewers Fayre sort of restaurants and kiddies, family-friendly restaurants. There's a lot of them around the UK. Um, they own all those sort of brands. It's, as you can see, it's had this quite a big sort of downtrend from the sort of middle of last year. It's been in this downtrend. It has warned about its Costa Coffee brand, um, about potential problems with profitability. But in general, it's been a very good performer. If you look at the run it's had, all the way since it really broke out in sort of 2012 kind of time. It's a good company. It pays. It's got a good history of paying solid dividends. And I've been watching it for quite a while now. Um, Coming down in this trend channel. This may be some sort of inverted head and shoulders here. This could be the left shoulder. This could be the right here. Um, I took the trade on the basis of really this little sort of engulfing bullish candle here, and I'm going to take it now, especially if it breaks this neckline. And gets back above the 250-day moving average. It's crossed here. It's already crossed. It's had the golden cross, the 50-day over the 200-day, which is normally a good sign. And I sold a couple of the January £34 puts. I got 118p out of them, so just over, well, almost £1,200 a contract a couple of times. So it's similar to sort of AstraZeneca, and it's a high priced stock, but there's good premium there in terms of the options. That's the first one. Moving on, Lloyds. Actually, been one of the times I probably sell options about 80% of the time, but this is actually, I'm long. I bought some calls. Last time I did this trade, it worked pretty well. I took it somewhere. I can't remember. It was a while ago now. It was somewhere. I took it off about the 73s level, which is where the government's break-even price was on the part of the bank that's nationalised, and I got part of this move here, buying calls. Again, it's a share I watch a lot. The only problem is, I mean, there's still 9% nationalised. The real problem seems to be this ongoing PPI business. I think it's been announced now that the deadline for this has been actually put back from the end of 2018 to first quarter of 2019. But I mean, it can't come soon enough. Obviously, the other problem is the net margin that the bank's making on lending out money. Obviously, with the fact that interest rates are, well, I mean, they've gone even lower since Brexit. So it's tough for the banks to make money. The amount of money they can make lending is severely sort of hampered. But Lloyds is there's no real investment banking arm to it anymore. It's a good sort of solid high street bank, I guess. And I think that's going to be more after what happened in 2008. I think that's going to be more the sort of the future for these sort of banks. They're going to have to go back to traditional sort of banking methods of making money. But it started paying a dividend again the last year. Its book value is very low. I think this is going to be, in the end, this will be, I think, a good share. I mean, I've been watching this sort of a falling wedge or channel or whatever you want to call it, and it's had a nice, quite impulsive break out here and a really strong break above the 50-day here. So I bought some. I bought 100 actually. I mean, obviously it's only around. It's a cheap share at the moment. So I bought 100 June 2017 calls at 2.75p. So I paid just under £3,000 for them, 2,750 quid for. I mean, that's a control of 100. Well, it's the ability to have control of 100,000 shares. So it's I know it's a small size stock, but for a few thousand you can get access to trading that amount of shares. I mean, if I'm going to really watch it if it does get back above the 200-day. That could be a good sign, but I think I've given myself a good amount of time to be correct. Obviously, if I'm not, then I'll lose my premium. Final one, is some FTSE options that I sold. I mean, the theme of the FTSE is it's driven by weak currency, so all your dollar earners, which is many, I think it's about 60% of the FTSE, and their money in dollars. So that's really sort of breathed a lot of life into the market, and people seem to be just buying the dips. So this is post Brexit. We had the run up, had these little holding patterns, a little surge. It's come back again here, little holding pattern. It's gone. It seems to be doing a similar sort of thing. You've got the 3 selling tails on here from the last few days, where it's as soon as it gets back down towards 6,900 or down towards the 50-day moving average, it's just getting scooped back up all the time, but pretty aggressively. I mean, I wouldn't be surprised if you got this sort of little line of resistance here, if it breaks out and goes again. So I sold some January 63.75 FTSE puts. I got just under, almost I got like 48p for them, so 480 quid a contract. And also the time of year. I mean, I know there's an election, but it tends to, this time of year, all other things being equal, it tends to go into a little bit of sort of Santa rally as well. So I think I may be a bit early, but I think I'll be fine still if it's, even if especially if it comes back down to maybe 68.75, that sort of level, it drifts a bit more. I think this is going to be, follow the trend. It's going to be a buy again, I believe. Okay, so that wraps it up for today.